All right. So today's SPY was down 0.21%, and it's another day of going absolutely nowhere. And we're sitting right on top of this critical support at 442. And if you draw this out, we're really just wedging into FOMC, which is completely normal because during a wedge, you are usually going to get a very large breakout. And going into an event like FOMC, there's usually a lot of buildup and a lot of hype because people are expecting to make a lot of money on a very big move in the market. So do not be surprised if we just continue into this wedge and just go up here towards this gap fill and then back down and continue to wedge out into the end of the month, because that would confuse the majority and that would really just chop up a lot of people expecting a big move. So I personally think there's a little too much hype going into this event, so I'm not going to overhype it. And I'm not going to sit here and tell you the market's about to crash or about to go skyrocketing out of the hole. And I really couldn't care less where the market goes from here because I'm simply following my trade plan anyway. So to illustrate this, let's take a quick look at the benefit of being a trader. And when I tell you that BANC Trade Alerts has been absolutely crushing the market, you can see very clearly just how much we are crushing the market right here over the last month. We are currently up 11.27%. The triple Qs are only up 2.73% in the same time, and the SPY is only up 1.4%. Now, based on this equity curve, you could see here in September 5th, we had that huge breakout on September 6th, and ever since then, we've just ran away from the market, creating huge separation of relative outperformance. So this is the benefit of being a trader, because in the last month, the market really hasn't gone anywhere, but our trading accounts are up over 11%. So this is why I always teach you to have a trade plan and follow your trade plan and stay disciplined, because as a trader, you can't care less if we go higher or lower. You simply need to make sure you're taking the best possible trades. And that's exactly what BANC Trade Alerts is designed to do. You can go long with TQQQ or go short with SQQQ. So we don't care if we go higher or lower. We simply just want to be on the right side of the trade. Also, don't forget, if you want to try BANC Trade Alerts, you can still claim that BANC Labor Day sale, which you can get all of the details in the description below. All you need to do is apply those coupon codes at checkout and you can get those savings immediately. All right, so going into FOMC, watch that critical support at 442, and do keep in mind these Bollinger Bands are squeezing, which does imply a big move is coming up around the corner, but we may need to fill out the rest of this wedge and get that breakout sometime in October. So right now, if I had to pick a direction, I would think we're going higher to fill the gap, and then we'll likely find resistance and continue to chop around until we get that inevitable breakout towards my higher price target at 480, which I do expect to see early next year. If we lose support and we break out of the wedge, we're looking for that critical support at 436 and then 430. On the NASDAQ 100 triple Qs, we were down 0.21% today, and again, we really haven't gone much of anywhere since Friday of last week, and we're currently sitting right on top of this critical support at the 50 EMA, which is this zone right around 370. Now keep in mind, this is basically the same exact story as SPY, where we're really just building out a wedge, and if we continue too much lower, we have that support trend line from the bull trend in the low 360s. So 370 is a very critical support, and the critical resistance is 378. And do not rule out the possibility we just continue to go sideways and build out the rest of this wedge until we get a breakout in October. 370 is critical support and 378 is critical resistance. On the Dow Jones, we were down 0.31% today, and the Dow Jones got that closed down below all of the moving averages. So we are looking a little more bearish while we're below 346. But I continue to tell you a lot of these are really just wedging out, which means we could continue to ping pong around for a little bit longer. So don't get overly excited going into tomorrow. We may go absolutely nowhere when it's all said and done. So don't get too excited. Manage your risk below 346 if you want to short. That's your risk level. And if you want to wait to get long, you can either wait till we get back above 346 or break that critical resistance at 350. On the Russell 2000 IWM ETF, we were down 0.39%, and the Russell is starting to go back into a trend because price actions below all the moving averages, and we do have the bear trend, and we are breaking down below 183. So below 183, you could be shorting the Russell down towards the gap fill at 176, but do keep in mind we're coming into support right around 178.8. If you want to get bullish, I would wait until we can get back above all these moving averages or break that resistance at 188, because this does currently look like a lower high, lower low in what is clearly a bear trend, which is evident by all the negatively sloping moving averages. On the ARKK ETF, we were down 1.19% today, and we're sitting right there at that critical level just below 42, but we are looking bearish below 43, and we failed to break critical resistance at 44.5. So it's very possible this is a lower high rejection, and if we come down here and break these lows at 40, we're very likely going down towards that gap fill at 36. So ARKK is bearish until we break back over 44.5, or we get to way lower levels, which is down there right around 36. On the VIX, we were up 0.79%, and intraday, the VIX did try to break 15 yet again, and yet again got crushed. So we're really not going to see high volume panic selling unless the VIX starts to spike out above 15. And this is more evidence that we may just stay in that wedge until we either break out bullishly and the VIX crushes, or we see a spike in fear and we have a reason to sell off and go to lower prices. On Bitcoin, we're currently up just over 1%, and Bitcoin is trying to break out above the 50 EMA, but that is outside the upper Bollinger Band, and the critical resistance is just a little bit higher at 27,700. Remember, we're bouncing from critical support at 25,000, so we may have seen the bottom, but we don't have confirmation until we break above critical resistance. So wait for that break just above 28,000, and then we'll have the all clear the bottom is likely in. If we get rejected here, make a lower high and come back down to 25,000 and break it, then we could start to see high volume selling to 22,000. On Tesla stock, we were up 0.46% today, and Tesla does look like it's trying to come down towards that gap fill, which is right around 256. But as we approach that zone, that is going to be a buy zone because we have the bull trend. So even if that gap does not fill, I won't be surprised because we also have a gap to fill above 289. So we're getting more bullish as we approach 256, and then if we fail to hold 256 and we break all of this support, then we can look for more bearish probabilities. But right now I favor the higher low off of 256 or off this support right around 262, and then break this resistance at 279 to tell us we're going to 290 to 296. On Apple stock, we were up 0.62% today, and Apple is looking very bullish above 174, and this is starting to look like a double bottom if we can get that breakout above 180. So if we get the break above 180 to close the gap and we close above 180, this is going to look like a bullish double bottom that could send us all the way back up to the gap fill above 190. So stay bullish above 174, and if you want to use a higher risk level, you can use 176. And if we break 174, that's your cue to get a lot more bearish because below 174, we'll likely go fill the gap at 167. So jumping back over the S&P 500, tomorrow is going to be a big day, but don't get overhyped about it. We're likely just going to chop around within this wedge, which does mean we could push off this support and go close the gap at 447. But again, we're not looking for any major breakouts until price action breaks this critical range with the support at 442 and the resistance right around 451. Once we break that range, then we can start looking for the next leg in this market, and there's no reason to jump the gun. Just be patient and let the price action do all the talking. We're absolutely crushing this market in the Stocks Channel Discord and Bank Trade Alerts, and you can still get the Bank Labor Day sale, which I'll put all of the details in the description below. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.